Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having a fantastic day. In today's video, we are diving deep into the macro, monthly and weekly charts, discussing some critical levels such as the weekly uptrend on the RSI, the recent breakdown of the daily range, the weekly 62.09 on the RSI, the weekly Gaussian channel, and much more. We'll also be diving into the short-term charts, discussing the current price action, what it will take for a reversal to develop, and as well discussing the altcoin and total market cap charts. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. That is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in VIP by clicking the pinned comment. We do have a sale on at the moment. The first pinned message will give you access to the membership details and a 50+ month trading track record. If you go ahead and click the membership detail link, you can see a second link, which is a 10-minute video showing you inside the channel itself. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to all of our group chats, our general chat, our trading chart and education chat, our daily video help, trade setup, community trade setup, and news chat. Check that out, guys. Join over 700 members and we'll see you in the channel. Let's dive on in. So as we can see, over the past 24 hours, Bitcoin has dropped yet again back toward the downside, actually coming down to a low at 82,000. We did see some short-term relief yesterday during the day, resulting in a rally from 86 back up to that $89,000 level, but we were unable to create new higher highs, resulting in an overnight dump back into that $82,000 region. We're going to be taking a look at the short term later in today's video, but the key points we want to be discussing are the weekly uptrend on this RSI, why it is significant and what this means. We're going to be taking a look at exactly what the buyers will need to do on the daily to bring this strength back and potentially reverse this. We'll also be taking a look at potential reversal targets, essentially how low Bitcoin could theoretically go, and we're going to be cross-checking all of that via the weekly charts in terms of the weekly RSI and one of our favorite macro indicators being the Gaussian channel. Let's go ahead and dive into the data. Looking at the 24-hour volume and liquidations to start off with, we can see a bit of a drop in both volume and liquidations, as the crux of that volatility we expected as a consequence of a break into this low historical resistance range has mostly been filled. And again, in the initial breakdown of this daily range, we said we'd expect a large surge in bearish volatility as we entered a low historical resistance range on the right, according to the visible range volume profile, which is essentially a horizontal, should I say a vertical range of price action measured on the horizontal scale, which depicts the horizontal volume requirements to be significantly lower than the expected inflow of volume as a consequence of a break of a critical level of liquidity. And thus we see significant drops and generally very rapid drops with high liquidations. And that is what we saw as a consequence of that breakdown, something we've been warning against or warning for quite some time now. Now, with that drop, we did see again the market basically fall over. We saw billions of dollars in liquidations, but those liquidations are now starting to dry up. We can see the current liquidation sitting at 328 million, down 56%, and volume 29% down, 202 billion. Moving over to the DXY. The DXY has managed to reclaim and hold onto this level for the weekly. Now, again, we do need to see this weekly candle close to validate whether or not this level is held as support. And as you can see here, we can see it is starting to trend back on upwards. This is going to be generally bearish for the risk asset market if we do see this trend develop back toward the upside. This could be a potential support resistance flip, which would basically indicate a prior level of resistance has essentially turned into a level of support, which could facilitate a continuation back to these highs. This would be the bearish scenario for Bitcoin. We would not want to see this occur. Moving over to the S&P 500, we can see the S&P 500 is looking very weak. We were for a second there looking like the buyers were about to step back in. This was about last week when that weekly RSI was crossing, but we got hammered down, suggesting the buyers were not able to absorb that selling pressure, and the exhaustion was very much still present on the charts, and we eventually did see that spill over back down to a wick into those mid-January lows. We can see while the RSI is under this general downtrend, momentum is still very much negative, and the overall expectation is we move towards areas of demand, particularly watching that 5,600, 5,700 level, where we would have the 50 EMA coinciding with these yearly lows, and of course our June 2024 highs. Watching very closely to that, again, for the bulls to get back in control, we need to see that RSI break out. Let's go ahead and wrap it up there and jump into Bitcoin and crypto. Before we do, if you are interested in supporting me making this content, and most importantly, supporting yourself in your trading, you can sign up to BitGet, BitUnix, or BingX. These are the links down below to the 3 exchanges we personally use. Again, the links down below will get you access to these exchanges, and you'll get a lifetime trading fee discount of 15% of all your trading fees. Check it out. Let's jump back into the content. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and jump back in. I want to start on this chart. Now this is going to be the weekly chart for Bitcoin, just a standard scale. We're not on the logarithmic chart over here. We can see the weekly uptrend on the RSI, and the weekly uptrend on the RSI is taken from some pretty important levels. First and foremost, we take this from the low point on the close of that macro descending channel formation, and of course the initial low of what was the falling wedge pattern, which resulted in an eventual reversal at the exact bottom of 2022. Now, this weekly uptrend is a representation of the overall momentum for the price action has generally been trending upwards, and we can see the RSI is coming back to retest this level here. This means 2 things. Number 1, we could see a trigger for a continuation lower if we are breaking below here in the weekly, and number 2, it could actually act as an area of which we could develop a brand new support. So we'll come back and discuss that in a second, but let's move over to why any of this is important and how those weekly charts are really looking. If we take a look at the weekly chart here, this is going to be the 62.09 on the RSI, horizontally put as this red line. We can see historically out of the last 15 times now, we've broken below this 15 times in the last 11 years. Out of the last 15 times over the past 11 years, 9 of those 15 times, not including the current time, we saw a correction of 10% or greater, 7 out of 15, 20% or greater, 5 out of 15, 50% or greater, 12 out of 15, 5% or greater, and 3 out of 15, we did not see a correction. So that means only 3 out of the last 15 times when we broke below the 62.09 in RSI, we did not see a correction. More than half we saw a 20% correction. If we take a look at the correction we have seen so far from the weekly opening price after the RSI broke below, which was going to be this candle here, and we dragged that down to the lowest point Bitcoin went to, which is around 82,100, we saw so far a 14 to 15% correction for Bitcoin since this indicator gave the sell signal. Very important stuff. Now, historically, we have seen scenarios where this results in deeper corrections, 20%, 50%, as we can see, even a few scenarios where we've seen 70%. Now, the only limitation of this signal is it doesn't specifically tell us how deep Bitcoin will go, only that the probabilities are in favor, or were in favor, of a correction which we have now seen. So we can't be using this indicator too much anymore to tell us how deep we are going to go, because that is not the purpose of this indicator. The purpose of this indicator, or should I say this data set, which has been spanned back 11 plus years, is to signify weekly momentum shifts at points of which historically have resulted in massive impacts in the direction of the price, not the percentage change expected from that particular trigger. What we can look at now is something such as the Gaussian channel to find some key levels we may be looking at moving forward. Now, historically, what we have seen with the Gaussian channel, if we delete everything off the chart, is once we retest the Gaussian channel from the upside and break into the Gaussian channel, historically, that has triggered a macro directional shift in the price action, particularly if done after a cycle top. If we take a look at the price action, generally after we create a breakdown of the 62.09, and I'll go ahead and bring that up, after we create a breakdown of the 62.09 on the RSI and the weekly, we generally, and I say not always, but there's been scenarios where we break down within the channel, we generally move towards that upper channel. And therefore, immediately, this upper channel level is going to be a key point of interest we are watching moving forward, a potential target, a potential correction target. Now, this is sitting at a price point of around 74,000 if we adjust for the direction of which it's moving across the expected time of which it could take to reach. So around 74,000 is going to be a very important level of support on the weekly. Now, this is where things get a little more bearish. If we drop below the upper band of the Gaussian channel and close within it, historically, after we create a potential top, so meaning if we do so when we have these macro bearish divergences, we generally enter a extended bear market. So I don't think the bear market has started. I think there's a potential for a top to begin over here. And I've said this for many, many weeks. This is why I've been out of Bitcoin since the 14th to the 16th of December. In fact, I've been out of cryptocurrency as a whole. I'm simply just day trading, and I'm still on the sidelines, still waiting. I'm cautious, but I'm optimistic for the future, but I'm aware that now is not the time I don't think I will be entering. I'm going to be a little bit more cautious and waiting for the right moments. But if we diverge back to what we're talking about, we can see here, guys, when we break below that Gaussian channel, that is generally going to be a macro trigger for a correction under the Gaussian channel. So when we break through the upper band, we generally drop under the lower band, which could result in an extended correction of Bitcoin, potentially back into that $44,000 region if that triggers. Now, I'm not saying this is going to happen. Very important. I'm saying at the moment, the probabilities are in favor of corrections toward the downside, potentially as low as 74,000. 74,000 is a critical level of support where major reversals could develop. But if we do not see that level act as support, if we do not see demand step in at that level, and we drop lower, we could see what we have seen in the past, which is a correction through the Gaussian channel, which would logically only take us into that 50 to 40, high $40,000 region. So we do have to be aware of that. All in all, the weekly RSI strikes again, and it was an amazing representation of how momentum is always leading to price. Let's move over to the daily chart. As we can see again, a breakdown of this level is not very good over here for Bitcoin. And if we invert that chart, you can look at from this a different perspective. You can see we've got this major low historical resistance range over here. We've got our prior areas of resistance at 74,000. which lines perfectly up with the weekly gaussain channel, and we have broken out of this major level on the short, or on the daily, should I say. So realistically, we've got two scenarios. Number one, we move straight up into this resistance where we then find support and bounce, or we come back down and retest this area as an area of support. And if we fail to sustain, we will see a continuation back up. So if we flip that back to a standard chart over here, that is what that will look like. If we go back to the standard chart, we have broken down from a major level of support. The expectation is that while we are below this resistance level, we are expecting continuations into our next level of support, unless we develop a new support within this low historical resistance range, which we'll discuss when we get to the short term, or we invalidate this move and we break back and close back above that daily range. If we are able to get back into this daily range, that would signify that we had developed a new support. This was the bottom, and we are expecting continuations upwards. Now, again, it's all about probabilities, not certainties. A lot of people are sitting here saying, well, I need certainties. I need confirmation of what's happening. This is not the time we get confirmation. In these low historical resistance ranges where we have expected increase in volatility and very little price data, mind you, we have very little historical data, we can't sit here and make absolute confirmations. Now, if we zoom out to something like this, when we posted publicly, and we said very publicly on Twitter, on Telegram, on YouTube, when we had that massive correction, okay, we had that massive correction all the way back in August, was it last year, we said right at the bottom, 49,000, we said this was the bottom, and I literally said on Twitter, the bottom is in. And the reason we could do that is because we had this historical data. We don't have historical data at the moment. We are in what we would call a low historical resistance range. So we are expecting this trend to continue until proven otherwise, meaning we are trading based on an invalidation method, expecting the current direction to continue until there is enough data to support the opposite direction will resume. So in this instance, what do we look for? We look for something like this. We look for something like a daily RSI breakout. We are watching for momentum to turn back positive. Again, just like we were watching momentum to turn negative to predict this breakdown, we are watching momentum to turn positive to potentially predict a reversal. At the moment, we are sitting under the 200 moving average, which means we do have relative weakness in comparison to the rest of the price action. The last time we saw that was, of course, all the way back in September. So we are in a position of weakness over here. And for us to be expecting continuations, we definitely need to see that daily RSI breakout. Until that happens, until we break the daily RSI, until we close above 88,000, I'm going to remain more bearish, expecting continuations lower. My particular price targets are going to be more ambiguous and situational, as we could develop new supports within these low historical resistance ranges, these vector candles. Otherwise, if we reach 74,000, that is going to be a pretty important level, which I'd like to assume will hold, and I will be looking for entries at that point, depending on the time frame, depending on how the momentum is developing. So let's move to the short-term charts. As we can see, we do have a downtrend on the weekly still. Now, this weekly downtrend will act as a leading indicator for the daily RSI to break out. So if you want to get in before the daily RSI breaks out, you can watch this weekly downtrend. So again, the weekly downtrend will only break at around that mid $90,000 region, and we are currently at 84,000, so it is still a while away. Best case scenario, we do see a move back into this region, a retest, and then we make a definitive direction from there. But worst case scenario, like we said, we remain under this $88,000 region. We just continue laddering down over the next few weeks, particularly if the economic news that is coming up, particularly on the 7th, the NFP does come out bearish, we could see the DXY pump again, and that could push the risk asset market even further down. But sometimes the answer is going to be ambiguous. Sometimes the answer is going to be speculative. Sometimes there is no clear answer in trading. That is the nature of trading. We are waiting to see how the price action responds here. I do not think there is enough data to say this is the bottom. I do not think this is enough data to say we are going all the way back upwards unless you're using speculative models. If we're looking at leading indicators such as momentum, I would say this is still looking very weak and we need to see the strength come back through that daily RSI. And until then, I am waiting for those continuations back toward the downside. I'm watching to see if we come back and retest 88K, how that price action will respond. And I'll say this to close the video off. And this is a very important quote. Confirmation is the insurance you pay to be right. Okay, confirmation is the insurance you pay to be right. There were many instances in this downward leg towards 88,000 where it looked like we could have continued higher, and it was almost baiting people into taking positions toward the upside for altcoins and Bitcoin. But we had not seen the confirmation we needed, which was the breakout of the weekly downtrend, okay, and the price to sustain 2 daily candles with the 50 EMA on the daily and that daily RSI to breakout. We had not seen the confirmation. So inherently, if you're entering without the confirmation, you are going to be taking on a little bit more risk than you ideally should. And that's just how I trade. Again, everyone's entitled to make their own decisions and opinions. I'm not trying to advise anyone on what to do. I'm simply sharing my own expertise and process behind my own thoughts. The total market cap is not looking fantastic. We have 3 days remaining. Very important weekly candle up and coming. Super important weekly candle up and coming, in fact, because the weekly candle below the 2021 high will mark this as deviation and opens us up to a potential further correction into that 50 EMA, maybe even lower. As for the altcoin market is not looking as bad as I would have expected, particularly with how the rest of the market has responded. Bitcoin dominance has dropped a little bit, which is maybe why we have seen a little bit more resilience in altcoins. In fact, some altcoins are holding relatively well, and I guess that's not really an indication of anything other than we do get some selective altcoins overperform and underperform in certain times. What we are still watching is going to be this 50 EMA. We are watching the 50 EMA, we're watching the weekly close, we are watching whether or not we can get back above 840 billion. If we can get back above 840 billion, I think there's a good chance we could see a reversal, but until then, it is looking very weak. Again, if we go back to the daily chart, we are still watching momentum, and I'll keep saying this until we break. We are still watching that daily RSI. Eventually, that daily RSI will break, right? We can't, apex much longer. Eventually, we're going to see a break in the next 2 months, maybe, okay? Maybe sometime in March. The question is, when will we see the breakout in relative to where the price is? If the price climbs up and we see the breakout over here, we're going to have a more aggressive reaction upwards. If the price continues to trend down and we break out down here, the reaction upwards might just be a dead cat bounce. So depending on the time in which we actually break this trend line, will actually have a pretty big impact in the expectations that breakout will occur, will have on the market. But either way, the breakout should result in an opportunity for some longs on altcoins, I believe, and we'll assess that when it comes. Thanks for tuning in. Have a fantastic day. Catch you guys later. Bye.